Welcome to my channel. Today we will be talking about the best way to get funding for your Amazon business. When I started my Amazon business, money was tight. I quickly learned that the best way to get funding isn't a one-size-fits-all answer. It depends entirely on where your business is right now. I've broken down the three main stages of funding I've seen and personally navigated. 1. The startup phase, bootstrapping and credit. When you're just starting, getting a traditional loan is almost impossible. Your primary sources are your personal savings, friends and family, and business credit cards. I use a high rewards business credit card responsibly. The key here is discipline. I only charged what I knew I could pay off before the interest hit. This built my business credit history, while letting me float costs for that crucial first inventory order. It's risky, but for the initial stock and fees, it can be the fastest injection of cash. 2. The growth phase, Amazon-specific lending. Once your sales are consistent and you have a track record, you unlock powerful Amazon-specific options. The first place to look is Amazon lending. This is usually invite-only, based on your sales volume and seller performance. It's incredibly streamlined because they already have your data, your sales history, your account health. The approval is fast and the terms are often competitive. I was invited after about a year of steady growth. The funds are typically deposited quickly, and repayments are automatically deducted from your Amazon disbursements, which makes it very hands-off. If you aren't invited to Amazon lending or need more flexibility, look into fintech lenders and revenue-based financing. Companies like Payability or 8Fig offer funding based on your future sales receivables. They essentially pay you a percentage of your projected sales up front. This means the repayment is flexible. You pay more back when your sales are up and less when they slow down. For me, this was a great option for major holiday inventory buys, where I knew a sales surge was coming. 3. The scale phase, lines of credit and traditional loans. If you're an established seller doing high volume, you move into more traditional financing options that offer better rates and longer terms. Business lines of credit are a fantastic tool. Unlike a loan where you get a lump sum and start paying interest immediately, a line of credit is like a flexible safety net. You only draw what you need, and you only pay interest on the amount you use. I use my line of credit to smooth out cash flow gaps. Say, paying a large supplier invoice before the sales revenue from that stock has actually hit my bank account. Finally, for major expansion like warehousing or a large product launch, you can look at SBA loans or bank term loans. These have the longest application process and strictest requirements, but they offer the lowest long-term interest rates. To get one, you need a solid business plan, clean books, and a strong personal and business credit score. The best advice I can give you is to start strong with bootstrapping and credit cards. Use that foundation to get an Amazon-specific loan or revenue-based financing to grow, and then move to a business line of credit to solidify your operations. Always calculate your true cost of capital, the interest and fees, to make sure the funding will lead to a profit, not just more debt. With that being said, thank you for watching. For more finance videos, kindly check my page. Please like, share, comment, and subscribe to my channel. Thank you.